The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray feeling good, Lewis. We're going to look at the German DAX and the FTSE like we usually do. And as you can see, they had a continuation of that up move that they had yesterday. And we're going to be at a real interesting spot here, folks, in the stock market because we finally had our first what we call mini pattern complete here this morning. I'll get this up here so you can take a look at it here in the E-mini S&P. When we got up to this level at 3350, you'll see that we completed a perfect ABCD pattern over a 3-hour period. It's a 15-minute chart. That was just about exactly 50% coming down, and now we pulled back. We came down the usual of about 30 handles. Not quite. We went from 49. Yeah, we came down 22 handles, and now we're trading up around 33.42. If we get below 33.32 this morning, that sets up the ABCD pattern that'll take it down to around the 33.10 level. So that's going to be relatively important, I think. Now, if we look at it on a little bit longer time frame, you're going to see the 382 retracement that we talked about yesterday. That was at the 33.45 level. We held there for several times, and then, of course, we went above it and smashed it, getting as high as 33.72, I believe, last night, and we're trading right at the 382 retracement now at 33.41, at least we were just a little while ago. So that's just part of what we're looking at. And then finally, the last one I wanted to share with you, if you get this up here and see it, and that is this NASDAQ on a 4-hour. That's the biggest of them all. You'll see that what we've done here is we did go above the 382 retracement at 11,343 and getting a little bit higher up to 13,400 and change. So whether that was just an aberration, the fact that the market was so very bullish yesterday with the Dow being up almost 600 points at one time, the S&P up 60 handles and up 200 and some handles in the NASDAQ. But that was expected, folks, because we had a tremendously bullish bias in the market that we talked about over the weekend. I especially sent this out on Saturday showing you that the fact that, we had this really, really strong bullish scenario going on. I'm not going to go through it again because we went through it yesterday, but the one that cleared the most was the S&P, because on Thursday we had made a perfect 61% retracement from the low on June 9th. We didn't make the ABCD pattern. We missed that by about 30 handles, but we exploded to the upside, folks. And then you can see with that big move that we had, you have to respect that. So we'll see how the market reacts today. Now, with the debates today, that's going to be a very, very interesting thing for the market. And of course, those of you that watch the markets through the time frame, you'll be able to see, the reaction that we're going to get. I plan on sending out a couple of videos during that time just to see what's going on, much like we did when 2016 when the election was going on, because, the market dropped after it looked like he was going to lose Florida. The market was almost limit down, and then, of course, when he came back and salvaged Florida, it bounced off limit, and all through the night it just kept moving higher and higher as the electoral votes came in, and then finally around 11 p.m. Tucson time, he had enough electoral votes to make it to the inauguration day. And from then, we just took off because it was really a big deal. And I want to share with you a chart that Rich Anderson sent to us that I think is relatively important. Let me get this up here, because there's a possibility of this happening, folks, and it looks very interesting here. This is a chart that shows the the number of large speculators positions in the S&P, the NASDAQ, and Dow Jones futures. And if you'll notice here on these red dots here, this is mean they have very, very heavy positions in here, and that means that you're fading some pretty smart dudes if you short this market. So I'm not sure how this is going to work out. But if you look at these different times here, you can see there in 2011, that was at the bottom. 2016, that was the bottom. Then you'll see the secondary, after that second red arrow, look at the high that we had there on election night. You'll see that. And so this is just a way of looking at, where the players are. And Frank, it's interesting to look at, but as part of a trading plan, it's over my pay grade to try to figure that out. Because what I do is so simple, folks. It's just, it's really quite easy. It is just an ABCD patterns along with ratios. And my goodness, it's not perfect, but my goodness, it gives you some really nice setups in and out during the day. So I think it's important that when you're doing your trading plan, that you've got to do something that you're comfortable with. Because, see, I can't use all the moving averages and all the oscillators and all the reports and all the fundamental stuff. I can't do that. I've got to keep it as simple as possible to say what's happening. And that bar chart that you're looking at is what's telling you whether it's right or wrong or not. Because no one knows what's going to happen next, and that's the whole beauty of this. But the good part is they can't hide from you. If prices are going up, there's more buying. If prices are going down, there's more selling. And that's all you really need to know. Now, you have to take, market feedback, and we're going to get some market feedback today. I can promise you, no matter what happens during these debates tonight, because there will be an interpretation of either positive or negative, and the markets will be reacting to that. And how do I know that? Is because the whole world is waiting for this to happen. So it's going to be an event, much like the election was, and you're going to see some fireworks. So that's what we're going to be watching. So it's going to be interesting to see, how things line up. That's my 2 cents worth, and I'm sticking to it. Also, the euro is started to bounce up to that level that we were waiting to see. We're not too far away from the 382 retracement, which I think would be a good sell. That would be at 117.40. I think we're trading at 117.15 right now. We missed 117.40 by about 5 pips on the first go around. So that's one that we want to pay, close attention to, and we'll see if that's going to work as we look at it through today. So pay close attention to that euro, folks, at 117.40, because it's got a chance to make a 382 retracement. And as you know, we watch that one because that's a sign of whether the market has changed direction or not, and it makes it a real interesting one to take a look at. Okay, now someone's asked a question about the crude oil. I believe we're in a bear market in crude, folks. I think that we're getting ready to start moving to the downside below 3,900. And my reasoning for that is that we hit that 61% retracement on the daily, and now we're heading down. So I hope that helps. I'll post a chart so you can take a look at it. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and we are going to take a look at the copper market here. Hold on one. Someone's asking me here we go. The hogs. I believe I'm looking at October. Mr. Z, that's at 7. I don't know where they're trading, but 72.90 was the number I was looking at in the hogs. I have not checked them yet this morning, but 72.90 is the one that I'm looking at. I know we're heading 2 more days. We're going to be looking at October 1st, but there'll still be a week or so that you can trade hogs without being, too much. But that's the one I'm looking at. You could use December if you like. It's a little bit weaker than they are in December, and you should sell. If you got the choice between the weakest and the strongest, sell the weakest. So you should probably be selling the December hogs if you're going to be looking at that. So I think that's what I'm looking at. We'll have to wait and see. I noticed that folks here are talking about Bill Meridian saying that the S&P should be higher into year end. That's certainly possible, and it's had a lot of momentum going. But remember, these markets can have tremendous moves, 100, 150 points before they make new highs. So what I try to do is to get down and find a spot where you don't have to risk a whole lot. That's why I posted that 15-minute. Now, that was a very nice pattern because it fulfilled the objective that I was looking for, but that doesn't mean it's going to be working an hour from now or 2 hours from now, because all I'm trying to do is to find the entry point to tell me how much do I have to risk to see if I'm going to be right or whether I'm going to be wrong. That's the whole sequence of, what I'm doing here. One of the things. Oh, I wanted to cover the copper market. Sorry, we had a question about the copper. Got off the tangent here a little bit, but we'll get it up here and take a look at it. I don't trade copper too often, maybe 3 or 4 times a year. This is what we're looking at here. You'll be able to pull this up here. Here's the copper. You'll notice back in September, we had the ABCD pattern came down. We made a lower low in September on the 11th than we did on the 3rd. Then we went up and had a really nice rally. We went from 295 all the way up to 311.5. You'll see that was a 3 drive to a top pattern. And from there, we dropped. We rallied up to a 78% level, came all the way down and took out the lows of September. And then over the last few days here, this is a 4-hour chart, so it's the 24th, we've rallied up above the 38% level, which is at 299. We got to 301, which was almost exactly 50%. Now we're trading 5 handles below that at 296. So the way I interpret copper from looking at this is that we've made a pretty substantial top up here at 312, and we've had the 3-day rally that stopped at the 50% level at 301. And if you look at it closely, I didn't get a chance to do it because I was rushing to get this chart out, you'll see from the 24th of September up until the yesterday, you had a beautiful ABCD there, absolutely perfect, spot on. Looks exactly like the S&P chart that I posted in there this morning on that 15-minute. They look exactly alike. So until we take out 301, I believe you're heading down in the copper. That's my 2 cents worth, and I'm sticking to it. Now, let's talk just a little bit about Mark Douglas. Folks, his birthday was the 27th. That was Yom Kippur on Sunday. Mark passed away on the 10th of the month, September 10th, and I just wanted to talk just a little bit about some of the things that I learned from him because I had known him back in '83 when we traveled around we actually traveled around the globe. We went to India and other places in Europe and Asia. But we became very good friends, and Mark decided to move here to Tucson in August of 1996. And what happened on that day is they flew out and found a home, and they went loaded up their stuff and came back, and they arrived on the 16th of August, and we were in the midst of a monsoon, and I mean it was a big monsoon. It was so bad that I picked them up at the airport, dropped them off at their new house. Their furniture had just arrived, so I came back, and I couldn't get into the house because the electricity was out in the area. So I'm just sitting there listening to the radio, and the rain is coming down so hard. As those of you who have seen monsoons here, you can't see your windshield wipers going. That's how thick the rain was. And I hear this tremendous boom and crash. And I had the largest tree in the neighborhood in front of my house. It was about 70 feet high, a huge sycamore, and lightning had hit it, and it split the tree in half, and it made it like a spear, and the part of the spear landed in the front in the street, and the other half of the spear landed through the top of my house into the back bedroom and went right through the roof, and the tree came right down into the basin there in the wash basin there in the master bedroom, and it didn't hit the basin. It just was laying right there, and it was about 5.5 inches round. No, it was more than that. It was about 8 inches round, and the water was coming in so fast. I didn't see this until about 2 hours later when I finally got into the house, but it destroyed the inside of the house. I had about 6 inches of water all through the house, and it was a disaster. Fortunately for insurance, it was a piece of cake. I was not able to work in the house during that time, so I had moved over to work with Mark for about 2 weeks until the house was completely renovated, and then I came back over here. And then after that time, Mark had an office here in the house, and we would trade together, and it was a lot of fun. And this is where he wrote the book, Trading in the Zone, and he interviewed all these dudes that would come in from just about everywhere and interview with him, and it was really an amazing thing to see, the psychology of this stuff unfold. I first met Mark back, like I mentioned, in '83 when he was working at Merrill Lynch, and one of the things that he was doing at that time is he was analyzing all the records of commodity traders for Merrill Lynch because they wanted to understand, why so many of these people, didn't do very well. And so what he did was, he categorized, how these people traded and what they did. And most first-time traders, when they start to do this, will fail. That the odds on that is about 95%, just like opening a restaurant. Second thing is that he realized that the main reason that they traded usually was because they were undercapitalized. So you had two things going against them. One, they didn't know what they were doing, and they didn't have any money to see if they could do it. So the people that had enough money eventually would turn around and find out, I know how to do something that worked for them, and they would get it right. So the factor is if you can stick with it, and the key word there is to stick with it, but you've got to be able to find something that you like. Now, I correspond here a lot with you folks, and I tell you my 2 cents worth, and the one thing that I should mention, and I do, is that if you're just learning this business, I know the S&P and the NASDAQ and the Dow Jones has that charisma that draws you to it, but my God, pick something simple, folks. Pick the euro versus the dollar, Canadian versus the euro, Swiss versus the euro, anything in the foreign exchange markets is much easier to trade. They're not affected by the Fed as much, and it gives you a hell of a advantage in trying to pick out what the S&P is going to do.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, someone's asked me a question. What are the main things that I learned from Mark? Well, that's about a 4-hour. That would be a minimum of a 4-hour lecture. Actually, the ones that are most important to me, and believe me, I was very, very close to the guy. I mean, he and I were very, very, as most of you know, we're very good friends. But the 4 things, you remember the 4 fears: the fear of being wrong, fear of losing money, fear of missing out, and the fear of leaving money on the table. We used to have discussions hour after hour about those fears. Probably the one that is the most important for people that are really good in trading, and they go through this fear a lot, and that is the fear of leaving money on the table. Even though they are extremely successful, they don't like to leave anything on the table. But that you have to leave something on the table, folks. Stop and think of that fear, because the only way that you don't leave money on the table is if you get the high tick or the low tick. And I've said this many times. That's a reserve for God. And she doesn't trade that often. So just remember, that's something that doesn't happen. The fear of missing out, folks, there's no way you're going to catch everything. It's just impossible. I'm watching, 8 or 9 things today. Like the hogs is one of the things I'm watching. Maybe I miss out. Maybe I don't know. But, that's a perfect pattern sitting there at the 1.618. I know that I only have to risk $200 if I'm going to do that. So that's what I'm looking at. The other one, number 2, is the fear of losing money. Folks, you've got to learn to lose money in this business. The smartest loser is the winner, because he keeps his losses nearly as to the smallest amount that he can possibly get. Now, determining what that smallest amount is not always an easy thing, and that's what you have to do as a trader to determine, how much you're going to look at. And that's where you have to look at the statistics behind the market, because most people, they lose here is because they don't study what the markets are actually doing. They don't see that the ranges of where the market can trade and still be within the confines of the pattern. So that's what we try to do here, is to give you some ideas, just like that S&P that I posted here this morning. That's a perfect Gartley on the ABCD pattern. Whether it's going to work or not, I don't know. We know that the market is certainly overbought, don't we? Yeah, we absolutely do know that. The $64 question is now, what are you going to do with it once you find out this information? That's a key thing to pay very close attention to. And then finally, the fear of being wrong, folks. If you think you're not going to be wrong, and this means just the opposite, that you're going to be right all the time, and again, that is not going to happen. So all those fears, they don't really mean anything. And remember, the acronym for fear, F-E-A-R, is false evidence appearing real. And that is exactly what it is. And if you get those fears out of your way, those of you that know me, and I never had this before, but as I got older, I now have a fear of heights. I don't even, when I'm watching a movie or something, and there's a situation when someone's out on a ledge or something, I literally close my eyes, because it makes me dizzy. I don't know why all of a sudden that's happened to me, but it certainly has. And so I realize that to face my fear, I have to walk out on a ledge, and that I'm not going to do. So I stay away from situations where heights don't mean too much for me. So that's me. And it's not a major fear, but it's just an uncomfortable fear. So I sort of stay away from that. The one thing that I did know, that I can tell you with 100% certainty, that Mark always talked about, and the one thing that will almost always cause you to have a losing situation, longer term or shorter term, and that is watching the monitor all day long. And believe me, Mark was involved with the CompuTrack, way back when, in the early 80s. When we were just getting these computers, desktop computers, so we could see all the chart patterns and putting in the stochastics and all the other stuff. So that's mainly why we wanted that, that's for sure. Okay. All right. Let's move on here to say something here for just a second here. I wanted to... give me one. I lost my train of thought. Getting back to that area, back with CompuTrack. Tonight at 7 o'clock, I'm going to be I'm going to be chatting with my good friend, Joe DiNapoli. I met Joe back in 1972, and I gave him his first proportional divider and showed him how to use Fibonacci numbers and stuff. And, of course, he went on to make a career. He's been in a little bit poor health lately, but he's moved back to the United States now. He still has his place in Thailand, but because of all the restrictions, they're not able to get back there. So I'm going to have a nice chat with him tonight at 7 o'clock. His hearing has gone bad, so it's like all the other body parts. Sometimes they work, sometimes they don't, but that's what happens when you reach those different milestones of what's going on in the world. So let's remember that we all come up to it. We'll have to wait and see. We got a question coming in here. David's asking. You know what? I never even thought of it. I'll ask him if I can record it. But frankly, knowing Joe, the answer to that will be no. But I will share you the content of what we talked about. Probably won't last more than a half hour or so. But it was, I used to go over and visit him probably 2 or 3 times a year, and we would trade together over in Bangkok, and then I would go on to China to do the speaking that I did there. So I did get to see him quite a bit many years ago, but I haven't had any contact with him for the last 14 years. So, I mean, I'll, maybe email here and there, but, sit and chat like we used to, that's been a very, very long time. And believe me, he's a man of few words, so he's not an easy person to chat with. So that's another thing that you got to keep in mind when you're doing this. But getting back to what Mark talked about is try not to follow that monitor all day long. And the only way you can break yourself of that habit is twofold. One is if you're going to put a position on, that's the one you don't want to watch. So put your limit minders on, okay, your beepers on. And if that's the case, just watch that particular one. Right now, I'm watching hogs, and I'm not even paying attention to those right now. But the one I'm watching right now in gold is at 1894. Now, the reason why I'm watching that is that we have a nice little ABCD on the 15-minute chart going over the last 2 hours that measures up there to 1894. And so far this morning, all we've had is 1894.50. We're trading at 1892. Now, I'm not watching gold now after that. Since I just put that on, I take it off. I put my alert on that if it makes a new high at 96, I want to know that, because that's where the old high was from the middle of the night. That came in at 1895, actually 1896 exactly. So that's what I'm watching. So if it gets there, then I can go and look to see if my trade setup is the way that I want it. And then whether it is, I'll find out right away, and then I'll know. So that's it. Now let me take a quick look here. We'll be right back. 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and a couple of things have happened since we were on a break. One is that we got an alert in the hog market. So let me show you what I am doing in the Little Piggies today. Here is the 30-minute chart of the October hogs. The December are not too much different than this. They're a little weaker, which is the one you should be selling, but this is the one that I'm doing my charts on. But if you'll notice here, the number I was looking at was at 72.90. That's been the low of the day today, folks, with the high being at 73.45. Now, I can't enter short hogs until we get below that opening price, which is at 72.90. Now, what happens there is that if I'm filled at 72.90, the order would be at 72.80. I want to make a new low. But if once I get filled there, then I put my stop above the high of the day, which has been 73.35. What does that tell me? That tells me that I'm actually risking 40 points in hogs. So I'm risking, just about $200 to see if I'm going to be right hogs. Now, am I going to be right hogs? I have no idea, but that sets up the pattern, and that's what I like to that's what I look at. So if you're going to sell them, you should sell the December because they are weaker than the October. So that's the key. Remember, we should sell the weakest, buy the strongest. That's what the old adage happens to be as we're going through here. Now, a couple things also along with, I'm going to spend more time each week, an hour or so, looking at some of these things about why we lose during some of these things. But to give you an idea of just some of the things that Mark, and this comes from one of the weekly seminars that Mark did many years ago. I've saved it because I use it in teaching and also giving you guys some information. But remember, when you're looking at these markets, you have a perception of what you think is going to happen. It's just a probability, folks. What you have to do, the perfect example is the hogs. I have a perception that I think hogs are ready to go down. Right now, that perception is wrong because it gapped up. That's why I had that limit minder on to tell me that see what's going to happen at that point, because I want to try to get as close to a small amount of risk as I possibly can. Now, I don't know if the pattern's going to work in the hogs, but it doesn't happen until we get to 72.80 in the October hogs. Then when you put the stop just a little above that of the high of the day, and that means you're going to have to take a lot of buying to get it up there. So that's why I'm watching it. So that's how I set up these trades. No different than what I was looking at this morning in the stop and P. I was watching that ABCD pattern. It did exactly what it was supposed to do. And so that's really, what I'm trying to do is line up those patterns to tell whether they're going to not. But Mark always used to talk about that successful trading is a function of staying focused. And here's an example of what I'm doing. I'm doing a radio show, which is not easy to do because I have to prepare for it. And now I'm focusing on several patterns that are lining up. And we just had another one happen while we were off the air. We talked about this when we first got started. Watch the price of 17.42 in the euro. We hit that price. That was a 382 retracement. That means a great deal to us. We know that the 382 is very, very important. It's trading at 117.44 right now, but that is a 382 retracement. In order for this to fail, you'd have to see it at 117.60. So if you're trading at 117.44 and you're looking at 117.60, you're looking at 18 pips or roughly $180 to see if you're going to be right or not. And we don't know whether we're going to be right or not, but nobody else does either. But all we're trying to do is to tell us that this is what we're watching, on an entry point for this. Now, the good part of this is, if you remember, we covered the short euro that we had there. We had that beautiful ABCD pattern. We'll get this up here so you can look at it. This market was down 8 days in a row. You can see the ABCD pattern there that came in last Wednesday. You can see Thursday, Friday, and Monday and Tuesday. And now we're making a 382 retracement of that whole move in there. But at that point, you don't have to risk very much because we covered it at 116.50. So we're 94 pips above where we covered it. And so where the risk here is very, very small. So I don't know if that helps you, but that's really what I'm looking at. Mr. Z saying, during your commodity corporation years, do you become comfortable trading in that environment? What do you mean by that environment? I like to be alone when I trade. If I have one guest here, that's no problem. But I don't like to have I enjoy trading when I do the full day session. That really shows you what I do. If you get a chance to listen to those, because that's what I'm doing here, is doing the same thing. But I like to be alone because I can think a little better. The difficult part of doing this show early in the morning is the key time of the day for me is that first hour. And, but hey, folks, as I get older, I look for about 3 or 4 good trades a day. Sometimes they work, sometimes they don't. And, yesterday we were really, really bullish, the stock market. But frankly, unless you bought it Sunday morning on the opening, that would have been Sunday evening at 3 o'clock Tucson time, it left you at the gate, because it didn't do that. But today is a little different. Today you had a nice Gartley pattern forming up there at the 55, and so that lined up pretty nicely. And so whether it's going to work, it's working right now, but that doesn't mean it's going to continue working. Same thing here with the euro. I don't know if this thing's going to work or not. All I know is it's got set up what I want to do, and it's one of the best patterns you could possibly ask for. And if you covered it at 116.50 and it's trading at 117.42, that's a 90 cent profit margin that you got. In other words, you don't have to risk very much at this point. So that's really what I'm trying to do. Then I won't be watching gold now, and I won't be watching euro, and I haven't been watching the S&P. So all I have to do now is to wait and see till the first beeper goes off to tell me that, that we made a profit objective, or you're stopped out, and then you move on to the next one. So those are the ones that I'm really paying close attention to here this morning, and that's really what we're doing. One of the things I have written down here and have it underlined from Mark is to keep in mind that we're always doing the best we can, because results will always be a function of the number and the quality of distinctions we can perceive about the market's behavior and how well we can act on those perceptions. And that's what I'm doing here this morning, folks. I'm trying to focus on 3 things that look very, very interesting to me. The gold at 1894, and the hogs, and then also the euro and the S&P. I will be happy to look for you, Maria. I will be happy to look at the British pound, no problem at all. It's having a little bit of a rally in here. Give me 1 second here. It's had a really good rally here off the bottom, but let me get this up here, Maria. And on a 4-hour basis, you can see where we are. We're still in a really big downtrend, and we're just get this up here and we'll take a quick look at it. The dollar looks very strong, folks. That's it. Hold on a second here. You'll see we didn't even make a 78% level retracement here yesterday. Came very, very close to it within about 8 pips, and now we've gone sideways. That's actually a very, very strong pattern right there, folks, that you're seeing here in the British pound. And I know that Maria is worried about Brexit, and we'll get this up here, and I'll tell you, oh, this is really interesting. We'll be right back. We got to look at this pound closely. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that will take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, Maria has just asked us to take a look at the chart of the British pound. As you can see here, we went down, made a slight bottom. They had the big move up. But look at this, a 4-hour chart, folks, and so you can see between Sunday night, Monday, and Tuesday, the 38% retracement level at the 128 level is really, really important. I mean, this is really start to showing some power here. And I know it's probably related to this thing that's going on over there called Brexit. And I don't know if it's going to mean much over there or not, but all I know is that there's a lot of support there at that 128 level in the British pound. Now, if some news comes out, it can go through there like melted butter, but that's your amount of risk if you want to be long the British pound is at 1.2800. We're trading at 1.2865. Now, the S&P's gotten down to 33. 34 this morning, and now we are trading at 33.40. The ABCD pattern ended up there at 33.48. So as long as we don't take that out, we still have a bias to the downside, but it's still, a little bit early to look at. Also, the key level to keep watching in the gold is at 1896. And I think that's an important one. Also, we've rallied more than $40 an ounce off the bottom that we made on Sunday at 1851. We got up to 96, so it rallied $45. So if you get a $17 break in gold, which is one half of the harmonic number, I would really be looking to be a buyer. That would be down there at around 1876. If you got that opportunity, I think that would be something just on a supply-demand situation. Looks like it would be pretty interesting. So that's what we're watching here this morning. And the old bell on the wall tells us it's almost time to move on to get ready for tomorrow's show. And boy, we'll have some volatility tonight, folks, with the debates going on. So make sure you listen in and get your popcorn ready, and let's see what happens. So live every day in an attitude of gratitude, and may God bless. And hopefully, with a little bit of luck, we're going to have somebody that you folks know who it is. And I'm going to tell you, it's Dr. Al Larson. We're trying to get him on the air either Wednesday, Thursday, or Friday. So live every day in an attitude of gratitude, and may God bless.